Hello guys, welcome to another trade breakdown video. Today I'll be breaking down the trade that I have taken on Monday, as you can see, 28th of January 2025. This was the day when Donald Trump was inaugurated as the 47th or 48th president of the USA on 2025, right? So this is a very big day. And also on Monday there was President Trump's peak, also Trump's inauguration day. The news was about Trump. So now this is a trade breakdown video, so I obviously trade with the daily bias. So my daily bias going on this day was clearly bearish, as you can see, according to how that Friday candle closed. So on Monday I will look for sells, and my weekly bias is also bearish. So my weekly and the daily bias was aligning on Monday, so I decided to take a trade. On DXY, the opposite, the weekly and daily was aligning to the upside, so I decided to take a trade. So when my higher time frame gets clear like that, that is when it's high probability to trade. So the price on the H4 time frame was still on the ranging in this bearish solidified range, as you can see, lower highs, lower lows, lower highs, lower lows, and the price was still on this bearish solidified range, right? So whenever the price is ranging in a bearish or bullish solidified range, it indicates us that it is very, very strong in that direction. So on Monday I was looking for sells. I waited for the Asian range to close as always, and after the Asian range close I was looking for a trade from this sort of H1 supply zone, because obviously this was the cleanest supply zone, and I would wait for Asian high, previous structural liquidity, and then this supply zone to trade from. But the market isn't perfect, the price action isn't perfect, right? Yes, you can read the price action as correctly as technically correct and perfect as it can be, right? According to the price action technical analysis, it makes sense for the price to go up, sweep the previous structural liquidity, and then get a sell from the supply zone. But here the price is not perfect, as I said, so it also makes sense for the price to sweep the Asian high and then literally go to the downside directly from there. Like in this case, the price went up, gave us a accumulation, and obviously whenever I see accumulation, manipulation and distribution, that is my entry model, right? After I see my draw of liquidity, this is my draw of liquidity, right? So the price has taken this liquidity, the price needs liquidity to move. Liquidity is the essence of the market. So after the price has taken this liquidity, now I would anticipate a move to the downside after the accumulation, manipulation and distribution, which happened exactly as I wanted to. On the M1 time frame, I can guarantee you for a fact that there is accumulation happening, manipulation and then distribution to our desired direction, which was bearish. So that is when I entered the trade for a 1:3 risk to reward. It played out to the T, as you can see. Got a 1:3, we are happy, right? So we also journal this trade, as you can see. The price doesn't need to go to the market zone as always. The price action is not perfect. If you're trading with a higher time frame bias, sometimes you can take the risk, especially in the phase ones. You can take trades like this. The entry model was so clean, everything we want to see in a trade was here, and yeah, it was a B setup also, you can see. Obviously the funded accounts, I would never take a trade like this on the funded accounts, but my phase 1 and phase 2s can be traded like this. So yeah, I'm getting a very good understanding of the markets now. I have detoxed all the dopamine. Now we'll see soon, bruv.